The case for $3,000 gold and $40 silver in 2024. Gold and silver have long been regarded as safe haven assets, and recent developments in the global economy suggest that both metals are poised for significant gains by the end of 2024, with gold potentially reaching $3,000 an ounce and silver possibly reaching $40. The stage is set for a powerful, continuous rally in the precious metals market. This surge is being driven by a confluence of factors, including inflation having now peaked and rapidly falling, Federal Reserve policies as a result of reducing inflation, geopolitical uncertainties, and the weakening of the US dollar, though this has yet to materialize, as other world currencies are cutting rates faster and their currencies are falling against the dollar, though this trend will eventually shift. 1. Gold's potential to reach $3,000. Gold has been on a steady upward trajectory in recent years, fueled by global economic uncertainty, inflationary pressures, and central banks' aggressive monetary policies in both directions. The possibility of gold hitting $3,000 by the end of 2024 isn't far-fetched, given the macroeconomic backdrop. One of the primary drivers behind this forecast is inflation. Until the last year or so, despite attempts to control inflation through interest rate hikes, rising prices have proven more persistent than expected. Central banks, particularly the Federal Reserve, may now resort to rate cuts by November 24 in an attempt to stimulate economic growth, as we have now seen a fall in inflation. Lower rates generally weaken the dollar, making gold an attractive investment as a store of value. Investors often flock to gold during periods of high inflation also, as it is considered a hedge against rising prices and against lowering inflation and interest rates, as the opportunity cost of holding this non-coupon asset diminishes. Moreover, geopolitical risks, including ongoing conflicts in the Middle East, Ukraine and Russia, and the looming US general election, are creating an environment of uncertainty. In times of political and economic instability, gold is historically seen as a safe haven asset, driving demand higher. The US election is expected to bring additional market volatility, which could further boost the appeal of gold. 2. Silver's path to $40. While gold garners most of the headlines, silver is often seen as a more volatile but equally promising investment. With silver prices potentially hitting $40 by the end of 2024, this metal is drawing increased attention from investors. Silver's unique dual role as both a precious metal and an industrial metal makes it especially intriguing. On the one hand, silver benefits from the same safe haven status as gold during times of economic uncertainty. On the other, its industrial demand, particularly in green technologies like solar panels and electric vehicles, is expected to grow. This increase in industrial demand, coupled with limited supply, creates the perfect conditions for a silver price surge. Like gold, silver also benefits from inflationary pressures and dollar weakness. If the Federal Reserve cuts interest rates further, which inevitably they will, the value of the US dollar will decline, pushing up the prices of precious metals. Additionally, silver's lower price point makes it more accessible to smaller investors, which could drive a speculative rally. 3. The impact of Federal Reserve policies. The Federal Reserve's now dovish monetary policy will play a significant role in determining the direction of gold and silver prices for the rest of 2024. After a series of aggressive interest rate hikes aimed at curbing inflation, the Fed has shifted course and have begun cutting rates, with another 25 basis point cut envisaged for November. Historically, lower interest rates have been a catalyst for gold and silver price increases. When rates are low, bonds and other interest-bearing assets become less attractive, prompting investors to seek alternative stores of value, like precious metals. Additionally, lower rates tend to weaken the US dollar, which is inversely correlated with gold and silver prices. 4. Geopolitical risks and market uncertainty. Geopolitical risks are another key factor that could push gold to $3,000 and silver to $40. The ongoing conflict in Eastern Europe, tensions in the Middle East, and trade disputes between major economies are contributing to a climate of uncertainty. In such an environment, investors traditionally turn to safe haven assets like gold and silver to protect their wealth. Furthermore, the upcoming US general election in November adds another layer of uncertainty. Elections often bring volatility to financial markets, and the 2024 race is expected to be no different. Depending on the election outcome, the policy landscape could shift dramatically, with implications for everything from taxation to trade policies. Investors are likely to hedge against these uncertainties by increasing their positions in gold and silver. There is some concern about Trump's proposed tariff policies, and we've created a video about that. Details below. Short term, they could be quite harmful to inflation, while some argue longer term they will be beneficial as domestic US manufacturing increases. 5. Inflation and economic instability. Inflation remains one of the most significant risks to the global economy, and it is one of the main drivers of the precious metals rally. Despite efforts by central banks to rein in inflation through interest rate hikes, inflationary pressures until around 12 months ago persisted due to factors like supply chain disruptions, labor shortages, and rising energy prices. As inflation continued to erode purchasing power, investors were seeking ways to preserve their wealth. Gold and silver, with their long-standing reputation as inflation hedges, were and are natural choices. Moreover, the possibility of a global economic slowdown or even a recession by the end of 2024 further strengthened the case for precious metals. But equally, the prospect of no recession and increased demand bodes well for the industrial demand for silver, which is why, if a recession is avoided, silver prices could rise to that $40 level. 6. Gold and silver supply constraints. Another factor that could drive gold and silver prices higher is supply constraints. For gold, production has remained relatively flat over the past few years, with few new discoveries to increase supply. Certainly not dramatically. At the same time, central banks around the world have been increasing their gold reserves, tightening supply further. Silver, on the other hand, faces challenges related to its role as an industrial metal. The demand for silver and green technologies is growing rapidly, particularly solar and electric vehicle production. However, silver production has struggled to keep up with this demand, creating a potential supply deficit. If this trend continues and accelerates, silver prices could skyrocket as industries scramble to secure sufficient supply. 7. The role of the dollar. The US dollar plays a crucial role in determining the direction of gold and silver prices. Historically, both gold and silver tend to move inversely to the strength of the dollar. When the dollar weakens, as it is expected to do if the Federal Reserve cuts rates, gold and silver become more attractive to investors, particularly those outside the United States. Moreover, the US dollar has been under pressure due to large budget deficits and rising national debt. As confidence in the dollar wanes, investors are likely to seek alternatives, again with gold and silver emerging as top choices. 8. Stock market volatility. Stock market volatility is another factor that could push gold to $3,000 and silver to $40. With equity markets facing significant headwinds, should a recession occur, many investors are looking for ways to hedge their portfolios. Gold and silver have historically performed well during periods of market turbulence, making them attractive options for diversification. Whilst equities are hitting all-time highs, this significant rise cannot go on indefinitely, and soon investors will be looking to hedge their investments. 9. The bull case for precious metals. The case for gold reaching $3,000 and silver $40 by the end of 2024 is rather compelling, based on a combination of factors including inflation, interest rate cuts, geopolitical risks, and supply constraints. With the global economy facing significant uncertainties, precious metals are once again proving their worth as safe haven assets. As the Federal Reserve prepares for further rate cuts and the US election approaches, the outlook for gold and silver still remains bullish. Investors seeking to protect their wealth and capitalize on rising prices should consider increasing their exposure to these metals, though we don't give investment advice. While no investment is without risk, the current economic landscape suggests that gold and silver could deliver significant returns in the months ahead. So in conclusion, the prospect of gold reaching $3,000 and silver $40 by the end of 2024 is grounded in solid economic fundamentals. Whether it's the decline in inflation and interest rate cuts, geopolitical risks, or the weakening US dollar, the factors driving this rally are unlikely to dissipate anytime soon. Investors who recognize the value of gold and silver in times of uncertainty could stand to benefit significantly from the continued rise in prices. If our prognosis is wrong and these figures are not reached by the end of 2024, we are very, very confident they will be in the first half of 2025. If you like this video, please share it and give it a thumbs up. Subscribe to the channel, press the bell sign. Also, let us know your thoughts in the comment section below. Thank you for watching. Have a prosperous 2024.